Hello, welcome to European Open Briefing for Wednesday, September the 19th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So yesterday's relief rally is continuing. Today we can see strong gains for Asian equities. We can see Chinese stocks closed more than 1% higher, and in Europe we also have a positive start there as well. So the relief rally was partially triggered by the fact that the tariffs announced by President Trump weren't quite as harsh as had been feared. So although China has retaliated, nevertheless, the tariffs were pretty much priced in by the markets, and there are some hopes that the two sides would still be able to reach some sort of an agreement to avert a further escalation. But further escalation is likely, so the current risk on sentiment is likely to be short-lived. Nevertheless, the US dollar has been moving lower over the past couple of days. Dollar index is down by 0.2% at around 94.42 at the moment. Dollar yen earlier reached a fresh high as the Japanese yen has also been retreating on the back of that improving risk appetite. We can see dollar yen currently trading around 112.30. If you look at European currencies, the euro is struggling to hold on to the $1.17 level, although it is up by 0.3% from yesterday's close. It hasn't really moved that significantly from the current risk-on sentiment, mainly perhaps due to concerns about what's happening in Italy as the finance minister continues to face a struggle with the Five-Star Movement Party in keeping the budget deficit low. If you look at sterling, though, it earlier reached an 8-week high. This follows comments by the EU's chief negotiator Michel Barnier overnight when he once again signaled that the EU is willing to compromise on the Irish border issue. Looking at the commodity-linked currencies, the Aussie, the Kiwi, and the Loonie are all up against their US counterparts. The Aussie and the Loonie reaching 3-week highs. The Kiwi is also up, climbing above the 0.66 level against the US dollar, despite the fact that there was some worse than expected current account numbers for the second quarter out of New Zealand earlier today. And looking at commodities, we can see gold is benefiting from the weaker dollar, climbing above the 1,200 level, and WTI oil prices have crossed above the $70 a barrel level. This comes after reports yesterday suggesting that OPEC is not willing to raise output in order to offset falling supply elsewhere, mainly from Iran. And there's reports saying that Saudi Arabia wants Brent oil prices to stay near $80 a barrel. So it looks like doesn't seem to be much willingness by OPEC to lower oil prices, and oil prices and together with oil are at the top of today's table, both up by around 0.5%, followed by the Aussie dollar, and at the bottom of the table we've got dollar index. Looking at dollar yen, though, the dollar is basically the yen is the only currency that the dollar is making gains against. It earlier reached a 2-month high of 112.42. This is mainly on the back of rising US Treasury yields, which yesterday hit a near 4-month high of 3.059%. So there are some concerns that the US tariffs on Chinese imports will eventually push up US inflation, and that would lead to a steeper rate path by the Fed. We're seeing expectations of the number of rate hikes by the Fed next year increased from just 1 to 2 rate hikes. So that is likely to support the dollar, even if we do see the current risk-on sentiment last a bit longer. Looking at the Australian dollar, we can see there's been a significant rebound since those lows, 2.5-year lows in the middle of September. It's now risen to a 3-week high, earlier touch 0.7255. So there was relief that the US tariffs for the moment will be just 10% as opposed to 25%, though they are expected to rise to 25% by the year end. This was seen as a signal that the US is willing to compromise compromise with China, or at least hold more talks. But the fact that China has retaliated by announcing tariffs on 60 billion worth of US imports, this raises the prospect that the US will now impose tariffs on the remaining Chinese imports worth up to $267 billion. And finally, having a quick look at sterling again, we can see it's been maintaining that uptrend that started at the beginning of September. It did touch an 8-week high, 1.3176 against the US dollar, following those remarks by Michel Barnier, where he said we are ready to improve this proposal. So that proposal is the EU's demands for the UK to agree to an Irish backstop solution, which the UK has been strongly opposed, as it compromises the UK's national integrity. But there are now signs that the two sides could reach an agreement potentially by the November summit, although at this week's summit taking place in Austria tomorrow, we're likely to see progress rather than an agreement. The sterling has also been outperforming against its other major peers. It hit a 7-week high against the euro pound, fell as low as 0.8862, while the pound yen rose to a 2-month high of just above the 148 level. And looking at what's coming up at the rest of the day, we've got UK inflation numbers being the main release in the European session, and we also, just worth mentioning, that we did have a Bank of Japan policy meeting earlier today where they kept policy unchanged, but the only other remaining highlight will be a speech by ECB President Mario Draghi. That's it from me. Thank you very much for watching, and have a great day.